Authority to adjust local tax rates? Question: what is the local government unit authority to adjust local tax rates? Answer: local government units have the authority to adjust the tax rates not oftener than once every 5 years, but in no case shall the adjustment exceed 10% of the rates fixed.
Residual taxing power of local governments. Question: what is residual taxing power of local governments? Answer: local government units may exercise the power to levy taxes, fees or charges on any base or subject not specifically enumerated in the Local Government Code (LGC) or under National Internal Revenue Code (NIRC), provided that the taxes, fees or charges shall not be unjust, excessive, oppressive, confiscatory, or contrary to declared national policy, provided further that the ordinance levying such taxes, fees or charges shall not be enacted without any prior public hearing conducted for the purpose.
Limitations of the residual taxing power. Question: what are the limitations of the residual taxing power of the local government units or LGUs? Answer: the residual taxing power of the local government units is limited by constitutional limitations on taxing power. Common limitations on the taxing power of the local government units as prescribed in Section 133 of the Local Government Code. Fundamental principles governing the exercise of the taxing power by local governments as prescribed under Section 130 of the Local Government Code. Section 186 requirement of the Local Government Code which directs the ordinance to be heard in a public hearing prior to enactment. Preemption in the matter of taxation simply refers to an instance where the national government elects to tax a particular area, impliedly withholding from the local government the delegated power to tax the same field. This doctrine primarily rests upon the intention of Congress. Conversely, should Congress allow municipal corporations to cover fields of taxation it already occupies, then the doctrine of preemption will not apply.
Principle of preemption or exclusionary doctrine. Question: what is the principle of preemption or exclusionary doctrine? Answer: where the national government elects to tax a particular area, it impliedly withholds from the local government the power to tax the same field. This principle rests principally on the intent of Congress. If Congress specifically allows municipal corporations to tax the same area, then the doctrine will not apply.
Scope of taxing power. Question: what is the scope of taxing power of local government units or LGUs? Answer: the Local Government Code governs the exercise of the taxing and other revenue-raising powers exercised by provinces, cities, municipalities, and barangays. Entities exempted from local taxes. Question: which entities are exempted from local taxes? Answer: the following is the exclusive list of entities which are still exempted from local taxes. 1. Local water districts. 2. Cooperatives duly registered under Republic Act 6938. 3. Non-stock and non-profit hospitals and educational institutions. 4. Business enterprises certified by Board of Investments or BOI as pioneer or non-pioneer, for a period of 6 and 4 years respectively, from the date of registration. 5. Business entity, association, or cooperatives registered under Republic Act 6810. 6. Printer and/or publisher or books or other reading materials prescribed by Department of Education or DepEd as school texts or references, insofar as receipts from the printing and/or publishing thereof are concerned. Specific taxing power of local government units. Taxing powers of provinces. Question. What taxes and fees are imposed by provinces? Answer. Tax on transfer of real property ownership. The province may impose a tax rate of not more than 50% of 1% of the total consideration involved in the acquisition of the property or of the fair market value in case the monetary consideration involved in the transfer is not substantial, whichever is higher. Tax on business of printing and publication. The province may impose a tax rate not exceeding 50% of 1% of the gross annual receipts for the preceding calendar year, or in the case of a newly started business, the tax shall not exceed 1/20th of 1% of the capital investment. Franchise tax. Notwithstanding any exemption granted by any law or other special laws, the province may impose a tax on business enjoying a franchise, at a rate exceeding 50% of 1% of the gross annual receipts, or in the case of a newly started business, the tax shall not exceed 1/20th of 1% of the capital investment. Tax on sand, gravel and other quarry resources. The province may levy and collect not more than 10% of fair market value. Professional tax. The province may levy such amount and reasonable classification as the Sangguniang Panlalawigan may determine, but shall in no case exceed 300 pesos.
Taxing powers of municipalities. Question. What taxes, fees and charges are imposed by municipalities? Answer. The following taxes, fees and charges are imposed by municipalities. On manufacturers, assemblers, repackers, processors, brewers, distillers, rectifiers, and compounders of liquors, distilled spirits, and wines. On wholesalers, distributors or dealers in any article of commerce. On manufacturers, millers, producers, wholesalers, distributors, dealers, or retailers of essential commodities. Rice and corn. Wheat or cassava flour, meat, dairy products, locally manufactured, processed or preserved food, sugar, sail and other agricultural, marine, and fresh water products, whether in their original state or not. Cooking oil and cooking gas. Laundry soap, detergents, and medicine. Agricultural implements, equipment and post-harvest facilities, fertilizers, pesticides, insecticides, herbicides and other farm inputs. Poultry feeds and other animal feeds. School supplies. And cement. On retailers. On contractors and other independent contractors. On banks and other financial institutions. Not exceeding 50% of 1% on gross receipts. On peddlers. Not exceeding 50 pesos per peddler annually. On other businesses. Provided that on any business subject to the excise, value added or percentage tax under National Internal Revenue Code or NIRC, the rate of tax shall not exceed 2% of gross sales or receipts of the preceding calendar year. Fees for sealing and licensing of weights and measures. Fees and charges on fishery rentals. Fees and charges on other business and occupations. Situs of local business tax. Question. What are the sales allocation applicable to businesses with factories, project offices, plants and other plantations? Answer. The following sales allocation shall apply. 30% of all sales recorded in the principal office shall be taxable by the city or municipality where the principal office is located. 70% of all sales recorded in principal office shall be taxable by the city or municipality where the factory, project office, plant or plantation is located. If plantation is located at a place other than the place where the factory is located, 70% is divided to 60%. City or municipality where the factory is located. 40%. City or municipality where the plantation is located. If the manufacturer or contractor has 2 or more factories, project offices, plants or plantations located in different localities, 70% shall be prorated in proportion to their respective volume or production.
Taxing powers of cities. Question. What are the taxes imposed by cities? Answer. The city may levy taxes, fees and charges which the province or municipality may impose. Taxes, fees and charges levied and collected by highly urbanized and independent component cities shall accrue to them and distributed in accordance with the local government code. The rates of taxes that the city may levy may exceed the maximum rates allowed for the province or municipality by not more than 50%. Except the rates of professional and amusement taxes.